I want to bring in at this point head of European foreign exchange strategy at Morgan Stanley. Joins us from their offices in London to really talk through the Swiss National Bank's latest move, their efforts, they say, to take action to really substantially weaken the currency. And so tell me, what is the significance of this move?
Yes, this is a very significant move by the SNB. In combination with the other measures that they have taken, this looks like they are going to put all their tools to work here to try and put the Swiss franc back under pressure, to weaken the Swiss franc and to try and turn the trend in the Euro Swiss. Now, given the extent of the measures they've now put in place, I think in the near term we are going to see the SNB being successful in holding the Euro Swiss above the 120 floor they've indicated. Obviously, they are now fully committed to this, and they have to continue to defend that level for this policy to be successful. But over the longer term, the developments within the Eurozone are still going to have the biggest impact, and ultimately the trend in the Euro Swiss will be determined by European developments rather than Swiss developments. What we need to remember is that Swiss FX reserves are already at 45% of GDP following the previous rounds of intervention. So they're already at very high levels. And that could limit the extent to which they are able or willing to maintain this current policy over an extended period. But having said that, I think this will be successful in the near term. They will hold Euro Swiss over the coming months, at least through to the end of the year.
And so tell me, what are the dangers and the risks of pegging your currency, of essentially being driven by external events, external factors, as opposed to your own domestic economic dynamics?
Well, obviously, the reason behind these moves is the fact that the strength of the Swiss franc was having a very severe impact on the Swiss economy. And the exporters in Switzerland were starting to feel the effects of the currency strength. That's why we've seen this action being taken. So while that continues, then we're likely to see the Swiss authorities continuing to take this kind of action to relieve some of that pressure on the exporters and to provide some relief for the Swiss economy. But ultimately, I think it will be the developments in the Eurozone which will drive the euro and drive a Euro Swiss over the longer term.
So given this need, this demand for haven assets right now, in this volatile environment, at what point, and it's a difficult question to answer, at what point do you think the franc will start to strengthen again? How long will this move be effective for?
Well, it will be effective for as long as the Swiss National Bank are able and willing to stand in the market and to defend that new floor. But obviously the stresses could build up if we start to see problems within the Eurozone intensifying once again, and we start to see a move out of European assets taking place once again, as you say, and investors looking for safe havens. But it could be that we start to see investors looking for alternative safe havens away from the Swiss franc if they believe that the SNB policy is going to be successful and appreciation potential is limited there. They may well turn their attention to the other safe havens such as the yen and even the US dollar. So if the market believes that the SNB is going to be successful, then we could see safe haven flows looking for alternative currencies.
Given that the 120 floor is still relatively strong, how effective do you think it'll be in alleviating the pressure that we're seeing on Swiss businesses and exporters?
Well, even at 120, this rate is still seen as very high as far as the Swiss franc is concerned, and it's not going to relieve completely the pressure which the Swiss exporters have been experiencing. And certainly we've seen the exporter associations and the government complaining about the strength of the Swiss franc quite a lot recently. So it does seem to be a measure aimed at providing some relief for the near term, but ultimately the Swiss authorities still see even at 120, the Euro-Swiss rate as too low.
All right, good to talk to you, Ian Stannard. Appreciate your time.